Hey guys, Whitney here. Welcome. I'm going to give it a minute for everybody to start filing in the room and find your Q&A box because I am so excited about today's webinar. My good friend Ryan Lee is in the house.
What's up, guys?
Ryan and I go back a few years now, and oh my gosh. Well, first of all, just such a wealth of knowledge, magnetic personality, and has just been so supportive on my journey to financial independence. And I cannot wait to share him to share his knowledge with you. And I know I'm getting ahead of myself. I'm putting the cart before the horse. I got to make sure I do the intro right for Melissa on the podcast. But anyways, let's see. I think we got enough people to get started here. So for those of you who are joining live, just first of all, welcome. This is the Passive Investing Made Simple show. I'm Whitney Elkins-Hutten. I'm the Director of Investor Education here at PassiveInvesting.com. And this is a live show where we dive deep into various topics around passive investing and real estate in general, just so to help you learn about real estate, passive investing, and just how to put all this knowledge into action. I am a huge proponent of that. Knowledge is not power, and knowledge into action is what is powerful. And so if you want to have access to our deals, future masterclasses, and all my free goodies, go to passiveinvestingwithwhitney.com. Be sure to fill out the form there. And you can also schedule time with me. Hint, 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 if you guys want to have a further conversation. Anyways, I'm so excited to bring in a very special guest today. Again, Ryan Lee, co-founder of Cashflow Tactics. Ryan, okay, like I said, I have already put the cart before the horse and let everybody here that's joined us live today that know that you and I go way back. You've been so instrumental in my journey. But Ryan, go ahead and take a minute and introduce yourself and how you got into real estate.
Hey, Whitney, first off, such an honor to be in your community. I got to just tell you, man, it's been so fun watching your journey and watching you rise to leading this community because you have such a wealth of knowledge and experience, and just you have the right mindset to succeed in anything you put your mind to, but especially in the game of real estate. So it's an honor to be in your community and to be sharing really the path I think that more people need to be aware of right now, because right now, so many people are stuck. They're worried about what's going on in the economy. They're worried about inflation. They're worried about the stock market. They're worried about taxes. And that list goes on and on and on. And there really is very few answers to that problem or that plethora of problems. Real estate happens to be one of the select few. And so grateful to be talking about that today. For me, Whitney, I learned about real estate probably the hard way. I've always been a hard worker. I grew up in a family that you work for everything you get. And I applied that discipline in my professional life. I applied that discipline with my money. And I applied that discipline in my health and my marriage and all these other areas. And in every single area except money, I seem to get results by working hard in a strategy to get an end result. But money for me was like this big unknown, right? The harder I worked, the more money I threw at the stock market, the more I hoped and crossed my fingers, the more volatile it seemed to be. And I came to a very stark realization in 2008 as I watched my market-based account plummet like a rock. I realized I had zero control. Now, Whitney, my hard work had been applied up to this moment. I thought if I worked harder, saved more money, I could retire sooner. And that was kind of the mode of operation I was following at that time. And I remember my 401k crested $100,000, and I didn't know what that meant. But shortly after that, that's when 2008 happened. And I watched that thing go from over 100,000 down to $28,000 at its lowest point. And at first I thought I had done something wrong, right? I had picked the wrong mutual funds. Well, I just did something wrong. But the reality of it was as I talked to coworkers and people around me, I realized they were all in the same boat that I was. They were all stuck. They had no idea what to do. And the only response I seemed to get was just wait, right? Just wait. And the market always recovers. But I'll never forget, I had a conversation with my, mentor at the time. He was nearing retirement. He was about 10 years away from the idea of retirement. I remember 2008 wrecked him. He thought he might not ever be able to retire. And I realized for the first time, I was on the exact same path as that dude, but somehow I was expecting a different outcome. And I realized if that is the path that I'm on, I had to take control. And that's led me into the world of alternative investing. Now that in the beginning was a very dangerous roller coaster as well, right? Anyone that's shifted from passive, do what everyone else is doing, to alternative investing, that's just a bigger roller coaster with higher highs and much lower lows. And I finally, after a lot of falling on my face, I finally found a system that works, and it's centered around cash flowing assets, which is real estate.
Awesome. Awesome. All right. So I know we can talk forever about real estate, and I'm sure those people who are here live are going to, formulate a ton of questions for you in our kind of what I call our after party section.
Yeah.
And I hope they do. Oh my gosh. Because
let's get that after party going.
But right now, we're here to talk about inflation. And so I listen to the Cashflow Tactics podcast. It's one of my 5 podcasts that I like change out like on my weekly, daily runs. So you guys did a series on inflation. I was like, yes. And I was just like, I got to bring Ryan in because he's got to share this knowledge with our community. So and I know we're taking 5 podcasts, I think is what you did, and distilling it down to like 40 minutes. Yeah. So guys, this is going to hit heavy and fast. But Ryan, I'm making sure that you've got power if you're going to show a screen.
Not sharing screen, yeah.
Not sharing screen. Okay, cool. So just in layman's terms, would you fill us in on what inflation truly is and why it occurs?
Yeah. There's so much history behind that, but, inflation is the erosion of the purchasing power of our currency, right? And today it is illegal in our country to use any other form of currency that's not sponsored by the government. If you can't pay your taxes in Bitcoin, right? You can only pay your taxes in the US dollar. And when that's the case, we then have to deal with the silent tax, which is inflation. And there's lots of different reasons for why inflation exists. I think the biggest thing that we pointed out in this workshop was, a lot of people are waiting for the next election cycle, right? They think when we get this crazy, Biden out of the office, everything's going to be better. And before that, it was when we get this crazy Trump out of the office, everything's going to be better. And before that, and the list goes on and on. And the crazy part about it, if you go back over 25, almost 30 years, if you go back over 30 years in our political party, there were Democrats and Republicans in the same political party. And we can look at the rates of inflation, but more than anything, we have to look at the new currency that was injected into the marketplace. And it's called M2 currency. Over the last 30 years, on average, the Federal Reserve has kicked in 8% more currency into the marketplace, which means if we're just saying there's more dollars chasing the same goods and services, by default, the rate of inflation is 8%. Now, maybe there's more goods and services, maybe not, right? They're shipping a lot of jobs overseas. We're shipping a lot of things that were happening here elsewhere, but yet we're injecting more currency into the economy. And so if we look at all of that combined, nobody's coming to save us, right? It's not a political agenda. It's understanding how the game of money works and how you can use the rules of the game, which have inflation involved, to actually thrive in inflation rather than hopefully just survive. And the reality of it is, especially right now, we can all feel it and see it more than we ever have in recent history. But there is a major silent tax going on, which is the erosion of the purchasing power of our dollar.
So from a historical standpoint, how have these cycles, are they correlated with anything? What role does the Federal Reserve play into this? Can you kind of fill in the gaps for me there?
Yeah, so the Federal Reserve and the president, they're kind of two buddies, right? Kind of running the same game through the banking system. The Federal Reserve isn't actually a federal, and man, we could go so deep down the rabbit hole, and it's kind of scary and sad. I remember the very first time I went down this rabbit hole, I read a book called The Creature from Jekyll Island. And it talked about how and when the Federal Reserve was actually formed. And it is insane, my friends. If you want to have a completely different look of our monetary system, read that book. I promise you, it's very dark, it's very scary, and it's very real of what the Federal Reserve is, because it's not part of our federal government and it is not even a reserve, but yet it's the thing that injects money into our economy through the banking system. And for us, the government stands up and they use 3 words, 3 tools to turn on the printing press, which is the Federal Reserve. They use the word bailout. Think about 2008. Hey, something happened and it's not your fault and it's not fair. We're going to give you a bailout. turn on the printing presses, stimulate the economy. Now, the second word that the government uses that turns on the printing press is stimulus. Hey, things are slowing down right now. It's no good. One day we're going to get it all fixed, but for the time being, we're going to inject stimulus into the economy to do whatever the stimulus is. Build some roads, buy back your clunker cars, whatever that is. Stimulate, stimulate, stimulate. All that means turn on the printing press. Or the third one, and this is probably the least popular one, but the third one is war. Think about in 2008 when we decided to go to war. Now, whether you were for or against war, war costs a massive amount of money. But whether it's war, stimulus, or bailout, those are the three ways that the government can then lean on the Federal Reserve to say, hey, we need more money. We need to inject more money into the economy through the banking system to run this machine called the economy.
So walk me through, so what's happening right now in our economy then? If those are the three things, right? Like what's happening right now?
Well, right now it's a major tightening up because I think right now what's happened is there's been way too much bailout. There's been way too much stimulus, and there's been, even though we're not directly involved in a war, there's been a lot of money going to a war that we're not directly involved. So all three of those things are going on simultaneously right now. Now, COVID, and here's the other crazy part. I mean, when we went from war, because we think of war, guns and soldiers and all of that, but that's not what, like, the government has kind of twisted this meaning of war. Now it can be a war on drugs. It can be a war on poverty. It can be a war on, you name it. They're calling everything a war, which is a reason to print and inject more money into the economy. So right now what's happening, I think there's a major tightening up, which is a massive increase in rising rates, which slows down how much people use leverage through the banking system. It slows down the money coming into the system. It slows down the system going, or the banks delivering money to the economy, and it slows everything down. And the reason for that is, I think a lot is caught up, right? I mean, right now we're feeling the effects of inflation at a higher rate than we've ever felt them before. And maybe if you go back to 1980, there are similar rates there. But if you go to a company like Shadow Stats, and Shadow Stats reports it reports how inflation was reported back before they started messing with the common basket of goods. Inflation right now is closer to 20%. And so right now there's a pulling back and a tightening up, trying to slow things down that have been unleashed.
Okay, so it sounds like the government has tools in order to kind of cool things off, and so pulling money out of the economy. Let me see if I get this right. Pulling money out of the economy, increasing the interest rates, and then what was the third? It sounds like there's a third one in there, and I can't really tease it out.
Let's see, pulling more money out of the economy, increasing interest rates. I mean, those are the two primary things. They could tax more, but that's also unpalatable. If you're going to go in and tax more to try to pull more money into the federal government to keep things operating and running, then you have to be running on a pretty strong platform.
Ooh, okay. All right. So these are things that are happening at the global, we seem to think it's only happening at the US level. I mean, all the research I've been doing on inflation, for not only for myself, but also various presentations, this is global, right?
Yeah.
This isn't just us.
And it's not a new thing. Like inflation, every time the government takes over the monetary system, it's just a matter of time before the monetary system is inflated. I mean, you can go all the way back to Rome. Rome back in the day, if I don't even know if people have quarters anymore, quarters or dimes, but have you ever wondered why there's those little notches around quarters and dimes? Well, back in the day, the Roman Empire started shaving the coins, and that's how they were inflating. They were shaving and not having as much metal in the coins, making every coin less valuable. So today they put, those little notches in the coins to show that they haven't been shaved off. So it's all the way back to the Roman Empire. Inflation, and it really comes down to, I mean, maybe it's greed. I don't know. Maybe it's just the thought process that a small group of people, a government, can make better financial decisions for a large group of people. I don't know. Maybe it's benevolence. Maybe it's wanting to do what's best for people. Whatever it is, inflation isn't new. It's not temporary, and it's not going away. So the result of that understanding, a historical understanding of how the game is played, is if it's not new and it's not temporary and it's not going away, we have one of two choices. We can be a victim of the reality that we find ourselves in, or we can be a victor of that same reality. In order to win in the game of money, you have to understand what inflation is, where it came from, and ultimately how to use it to not just hopefully survive, but to actually thrive.
So, all right, let's start there. Like, what is the mindset that an investor needs to have today?
Well, I think they have to understand that inflation it's actually can be a tremendous tool. So let's think about it this way. One of the things that we did in this big inflation workshop, and maybe, we can give that as a bonus to them, but we gave them the 6 rules of thriving in the age of inflation. And the first rule, I think, of thriving in the age of inflation is you have to understand that money doesn't really exist, right? I mean, it really doesn't. Money, whether it's a seashell that we're exchanging, or it's a piece of paper that we're exchanging, or it's a digital number in a digital account, or it's a Bitcoin or whatever it is, currency, what it is, it makes exchange easier. So if money doesn't really exist, we're just using a symbol, which is a dollar, as a medium of exchange to say, hey, I'll give you some dollars for the thing that you have. And we've all agreed on what these dollars are worth. Now, when we've all agreed what these dollars are worth, we then have to take a step back and look at the broader economy to say, how do these dollars actually work? And if we're not getting the results that we want financially, at the end of the day, what that represents is it represents that you have a lack of financial intelligence in a given area of your money. If you're not making enough money, you don't have enough financial intelligence to make more money. And you can be a victim of that, or you can do something about it. You can raise your education. You could listen to podcasts like this. You could follow Whitney and learn how to create more value and then make more money. If you don't know how to if you don't know how to thrive in inflation, it means you have to raise your financial intelligence, your financial IQ, to understand the game of money. And there's these categories of money that we find ourselves in. And so first one is understanding that if you want more money, you have to understand the rules of the game or raise your financial intelligence. The next thing is, I think the biggest thing, and this was a hard one for me to get my head around, to be honest with you, Whitney, this took a long time for me to really accept and then ultimately embrace. But especially in the world that we live in today, we think money is the dollars that we have in our bank account, right? The money that we can actually go pick up and say, hey, this is my money. I want people to consider, especially right now, that that's not money, right? Debt is money, right? And that's a tough one, because when we say the word debt, like what's the first like reaction that comes to you when I say the word debt?
Well, if you asked me like 7, 8 years ago, I would be scared, right?
Yeah,
Like it's evil, like don't have it. But like now I'm like, what kind of debt is it? Is it mine? Is it somebody else's? Like, can I get somebody else to pay for it?
Bingo, that's it right there. So let's go down that rabbit hole just a little bit more. Let's talk about bad debt. Bad debt is using other people's money to buy things that you can't afford and then making payments from your income. So if I'm going to go take a loan from a bank using other people's money to go buy a really fancy car so I can look cool and impress my friends, and then I'm going to pay that car off using my time and my income over a period of time, that's bad debt, right? I should probably limit that and use that very, very responsibly. And when people hear the word debt, that's usually what they're thinking about, because in the consumer world that we live in today, it is so easy to become disconnected from money, right? We don't actually touch it anymore. We don't actually exchange it anymore. I remember back in the day where if I didn't have any money in my wallet, couldn't buy anything, right? I couldn't take nothing out of my wallet and then go buy something. But today, with the invention of digital currency and credit cards, man, people can spend money and not even be attached to, does that even align with the money I actually have? Before they know it, they can find themselves in a world of debt. So bad debt is using your time to pay back, future obligations on liabilities that do nothing for you. Good debt is using other people's money to buy assets that other people pay back for you. Okay, so let me make that distinguishing difference there. Good debt is using other people's money to buy assets that other people pay back for you. So when I say that, unless you understand what the details are behind that, most people are like, I don't get that. How does that work? So I really believe that if I want to acquire debt, and there's a quote by Warren Buffett, it's a little bit older, and he's doing an interview. I can't remember who he's doing the interview with, but he says getting a mortgage is the most powerful financial tool that an individual can use. That in a mortgage, you, the individual, me and you, we can access terms that Berkshire Hathaway, a multi-billion-dollar company, can't even come close to touching. So he said if it was him, he'd get as many mortgages as he possibly could. And most people don't know this, but I could go out and get 10, 20, 30, 40, 50. I can get 50 mortgages. That's good debt. So step number one, you need to have a cash flowing asset. I can't just walk into a bank and say, hey, Whitney said I should get some good debt. Do you guys have some good debt here for me? I mean, show me how to get good debt, bank. No, you have to go find a property. The property is what allows you to then acquire the debt. In order to have a property, you have to be able to qualify for it. So you should probably look at your job as a tool to become financially free. You need to have W-2 income or 1099 income or an income history, a good credit report, whatever it is. That then gives you the permission to go into a bank and say, hey, I've got this house over here. It's worth XYZ. I think I can cash flow on it. Would you give me a mortgage? And the bank is going to look at your W-2, look at your credit report and say, yeah, it's cool. Why don't you bring 20% down, right? You go, if the house is $200,000, why don't you bring 40,000 to the table? And guess what? We're going to give you 160,000. So they then give you the mortgage to buy the majority of the property. And here's the most amazing part. Okay. Now, if I'm doing this right, I'm then going to go secure a tenant, right? I'm going to get someone to live in that property. That tenant, and if I've done my math right and understand the ins and outs of being a real estate investor, that tenant is going to pay my mortgage back for me, right? They're going to make a rent payment every single month. Portion of that rent payment should go pay off the mortgage. It's going to cover the expenses of owning the house. And maybe it's going to put a little bit of money in my pocket. So step number one, find a cash flowing asset. Step number two, have a credit worthy ability to go leverage money from a bank. Step number three, get a tenant in the property. And step number four, man, do that as often as possible, because there are so many additional benefits of owning real estate. But number one, you get to take your worthless dollars that are getting devalued over time. And I want you to think about this for a moment. Like if I take a mortgage today and I start paying that back, let's say my mortgage payment is $1,000. I know what $1,000 feels like today. But what if I actually start paying this mortgage back and I hold that property for 5 years, for 10 years, for 15 years, for 20 years at an 8% inflation rate, which is what I said over the last 30 years. If we really look at the injection of money into the economy, what inflation actually is at an 8% rate of inflation, what does it actually cost me to pay that mortgage back 5, 10, 15, 20 years down the road? A fraction of the price, right? My payment stays fixed, which means I'm paying it back with devalued dollars over time. But at the very same time, I have an asset that's going up in value. I get to raise my rents with inflation. So all of the profits are rising with inflation, but my cost is actually decreasing as a result of inflation. Does that make sense?
Yeah, definitely. And, just for some of our listeners, because we talk a lot about passive investing, we can do similar things with passive investments. And so, and I know a lot of people who are here, and myself included, have single family properties, small multifamily properties. And so this is just like a characteristic of real estate. And what I love here is, and something that I've been driving home with people that are in my community is like the debt is where we're making money right now. And so locking in that, good terms right now, will help us kind of ride out this wave. Now, okay, we've talked about the asset class that actually beats inflation. It sounds like we went over 5 of the 6 points. Is there a 6th point that we need to cover here?
Well, so the other 6 things. So I'll just give you the 6 rules, whether we talk about all 6 of them or not. But number one, you got to raise your financial IQ. Number two, you have to understand that debt is the new money. So number 3, once you understand that debt is money, you need to multiply your money. Because here's how a bank works. Like a bank works. It's so crazy when we understand how the banking system works. But like we go put $1 in a bank, right? And let's say Whitney, you go put $1,000 in the bank. Do they take that $1,000 and do they put it in the safe and say, hey, this is Whitney's money. Let's just wait until she comes back and then we'll have the $1,000 for her? No, the banks are actually lending and leveraging out your money, my money, all of our money. And here's the reality of it. The banks do that as often and as frequently as they can. Their entire system and model is set up to say, hey, put money in the bank and let us leverage that money and multiply the value of that money. Because for every dollar you put in, they can then lend out 10. So they can turn $1 into 10. You need the same way to multiply your dollars. So if you have to put a down payment on a piece of property, then that's why you use debt. You now turn $1 into 5 by simply using leverage, okay? Then after that, the next rule is converting debt into cash flowing assets. So you have to have a framework to understand that you're buying the right property at the right place in the right time. And as you said, Whitney, with the right system. So convert your debt into cash flowing assets. Then number 5, we talk about building your empire on a rock. I believe in the game of real estate, there's only 2 reasons anyone will ever fail, just 2. Okay. Number 1 is they get knocked out of the game. Okay. And this is the most scary part about real estate. When you're taking on leverage, when you're entering into a game where you've multiplied your money, you have to build that on a very strong foundation. And I know in the beginning for me, I got so excited about this idea of leverage that I thought I'll build my reserves later. I don't need reserves. Reserves are dumb, right? Reserves are boring. I want every dollar leveraged and working. Now, Whitney, you own a lot of real estate. I've talked to you about your real estate over the years. Have you ever had a surprise bill on one of your properties for maintenance or vacancy or anything like that?
I mean, how many do we want to list?
Yeah. So here's the reality. How many do we want to list? It's not a surprise. Like, owning real estate, part of the game is you're going to have stuff that comes up. Now, sometimes it might be a little bit higher than you expected, and then you'll adjust your expectations. But the only way you get to win in the game of real estate and harvest the long-term benefits of an appreciating asset and declining value of debt is you have to stay in the game long enough to harvest those benefits. If you get in the game of real estate today and you're knocked out tomorrow, guess what? You lost. And if you get knocked out tomorrow, you might go bankrupt. And you lost big time, right? So look, the reality of it is, if you want to win in this game of real estate, number one, you have to build your house on a rock, have reserves. There's a whole framework. I'm sure, Whitney, you talk a lot about that. Reserves will keep you in the game so you don't get knocked out. Number two, the only other second reason why someone is going to lose in the game of real estate is they quit. Now, becoming financially free, becoming wealthy, it's not difficult, but it does require a level of fortitude. Putting your money passively in the stock market is the easiest thing ever. One, because everyone's doing it. And two, because you don't have to take any personal responsibility, right? When my stock market went down 80%, I asked questions. What could I do? What should I have done? And there's nothing. This is just what happens in the market. You just wait it out. And in the long run, the market always comes back. And it was so disheartening to me that why would I take my representation of the time that I had been trading, which was my money, right? I'd been trading a lot of time, effort, and energy to get that dollar in my hand. And that dollar in my hand represented the dreams that I had. Why would I put it into a system that I couldn't control? But here's the reality. In real estate's hard. Like, Whitney, I'm sure you have a story, but the very first time that you got a major repair bill or a tenant skipped town or whatever it was, it's kind of disheartening. I'll never forget. I had 3 houses, and I remember I'm the worst property manager in the entire world. And I thought I could be wealthier if I tried to do everything on my own in the beginning. I've now learned the value of having a system and teams in place. But on this third property that I had, I remember I came home, I closed on it over Mother's Day weekends, and I did an open house over the weekend to get some tenants in, to get some prospects in there. And I had one guy, and this guy was willing to pay me more than every other person on that house. He was willing to pay me a higher down payment because I was doing a lease option at the time, and he was willing to pay me 6 months of rent in advance. Now, everything on this guy's application was a red flag, but that dude was throwing money in my face, and I thought, oh, I'm going to take the money, right? Over the next 6 months, that guy made my life a living hell. And it got to the point that every time my cell phone rang, I had an anxiety, a panic attack, because I knew it was him and I knew it was a problem. I'll never forget one day, I sold hospital beds back in the day. I was in a boardroom trying to sell a group of hospital administrators all this hospital equipment, and my phone just started ringing, boom, boom, going off. And it was from different phone numbers, all from the same area code. And I knew in the back of my mind exactly what it was about. So I excused myself from the boardroom because I realized that there was a problem, and I listened to my voicemails. And I had a voicemail from my tenant's wife crying uncontrollably. I had a voicemail from my tenant yelling and screaming belligerently. I had a voicemail from several of the neighbors of the property that I own saying they were going to sue me. And I had a voicemail from a police officer saying, son, you better call me. There's a problem. And so I got to the bottom of it. I called, and this tenant had actually shot with a gun a neighbor's cat. Just got tired of that cat pooping on his yard and shot the cat. And at that moment, Whitney, I wanted to fall apart. Like, I wanted to fall apart and realize maybe I'm not cut out for real estate. Maybe I just need to take whatever I can get in the game of money. Maybe financial freedom isn't even possible. It's just this thing that gurus sell. But then I had a question that I had to ask myself. The only difference between what I wanted and who I was at that time is I had to become someone different. I had to raise my financial IQ and be a better steward over my time, my attention, and my resources to get what I wanted. And I resolved at that moment to stop trying to do everything myself, because I sucked. I wanted to build a better system to make better decisions so I could be financially free. So you only lose if you quit or if you get knocked out of the game. And real estate isn't easy, but my friends, it's worth it. So that's how you build your rock on an empire. And then the last tool in our toolbox was, my friends, move forward with faith, not fear. I think so many people right now are just closing their eyes. They're hoping that they're going to get through this. They're just waiting for the next election cycle, or waiting for something in the road, waiting for things to get better. Then they'll open their eyes up and try to figure life out. My friends, there are massive, massive, massive opportunities right now. I believe that the greatest wealth transfer of all time is happening right before our eyes. The question is, are you participating in it, or are you becoming a victim of it? So those are the 6 rules.
Oh my gosh, that is like mic drop material. I love it. So,
Yeah.
And what I love about that is that, we started out the conversation in context around inflation. Like, what could our listeners do to help protect themselves around inflation? And what you shared, Ryan, were principles that work in any type of environment, right? Whether we're dealing with like inflation or recession or whatever, right? Like, so that's amazing. I always ask this question, and is there ever a person that real estate is not for?
Yeah, I think it goes back to that idea of knowing that you're willing to deal with problems. Like, if you want to be financially free, you've got to raise your level of stewardship, and you've got to raise your level of responsibility. And not everyone is willing to take responsibility. Not everyone is willing to look for solutions when a problem is presented. And if that's not you, you either need to become that person, or you need to steer clear of real estate. Right. I mean, that's just what the bottom line, because real estate, you get paid in direct proportion to the problems that you solve in real estate. If you're unwilling to solve problems, you're not going to make money in real estate. So my friends, that's how I would look at it. If you want what you say you want, if you want to be financially free, because I've seen people, Whitney, we work with people in their personal financial situations. And I've seen people that have, quote unquote, enough money in the stock market, in mutual funds and 401ks, who aren't free. And here's why. They don't control what happens with those accounts, and they are scared to death to spend any money, right? They're worried about taxes. They're worried. In fact, this is a sad, sad example, but my in-laws just retired last year. And right now, their entire retirement plans, they've put them on pause. They've put them on hold. Why? Because their stock market accounts have been tanking and tumbling. And now they're realizing, oh my gosh, maybe we don't have enough money saved up. Maybe we can't make it all the way through retirement. Maybe we should go back to work. So even though whether they have enough money or not is irrelevant, if they don't control it, they're not really free. So my friends, that's really what this comes down to, is if you want to be free, you have to take that freedom comes with the other side of the stick of control and stewardship. And that's what some people are unwilling to pick up.
Okay. So guys, this is an amazing time. Go to the Q&A box, drop in your questions for Ryan. And while you guys are doing that, Ryan, I want to, you've dropped so much knowledge, but I want to ask you, what is your best piece of investing advice?
I love it. My best piece of investing advice, and you said it a little bit earlier, it's remember that money isn't the objective. Okay, you talked about passive income, and I think that gets people a little bit excited, and oftentimes that pulls people and gravitates people to doing things like real estate, right? Using leverage. But where a lot of people get lost is they forget to build a system to make it passive. And before they know it, just like me in the beginning, I had a part-time job doing real estate, and I sucked at that part-time job. And if I really sat down and added up how much I was making with the hours I was investing to get a result, it was basically, I might as well have gone and worked at McDonald's. It would have been easier, and I probably would have made more money. So like, I think that's the biggest thing that I would caution people on. Real estate, if it's not done right, is a job. Right? Real estate, when it is done right, is still a job. That doesn't mean you have to do it. You need to manage the outcomes so you can own and control your most valuable resource, which is your time. That's the objective, is to build a portfolio, to build a system that requires your management and stewardship, but not as much of your time.
I love that. I mean, and something that I continually talk about, especially on podcasts that I'm on, is like the five freedoms that people generally are trying to pursue in life. Freedom of finances, right? We talk a lot about financial independence. Freedom of time, for me, that is a huge one. Freedom of choice, freedom of location independence, freedom of impact. And so, I mean, the only way you get some of those freedoms is if you make things passive, right? So I love it. All right, we had a question come in. I've heard a lot of people say now is the greatest wealth transfer in history. Can you explain what that means to you?
Yeah. So what that means to me is people who understand that debt is money are getting as much debt as possible. Like literally, that's exactly what it is. And guys, I don't want to, I mean, I could pull this curtain back as far as you want it to go back, because here's the crazy part. In the last 7 years, but especially the last 3 years that I've been involved in real estate, there has been more opportunities for me to leverage dollars and convert dollars into debt than I've ever seen, ever. Ever. I mean, during 2008, or not 2008, during COVID, 2020, 21, 22, whatever, those years, the government had a stimulus, and I can't remember what they sent out to everyone. They sent out like $500 or whatever, $1,000. I bet most people spent that on sneakers and whatever. In fact, we have an executive in our community. He works for, it's either Reebok or Nike, I can't remember. And he said 2020 was the best year ever. Everyone used their stimulus to buy new Jordans, right? But here's the reality. On the same token, the government opened up massive opportunities for business owners. And when I say business owners, if you own real estate, you own a business. They open up a massive opportunity to open up unlimited. I mean, it's crazy. They opened up so much ability to use leverage inside of the business of real estate. It was unmistakably insane. So when I say the greatest wealth transfer is happening right now, it's because people who understand that the game of money today is debt. You have to secure debt with an asset, and your objective should literally be convert dollars that are becoming more and more worthless every single day into assets. Take dollars and convert them into assets as fast as possible, and then use leverage to take your dollars further and faster.
Yeah. So, and for those of you who are very math driven, Ryan already pointed out, it can be, you can take $1 and turn it into 5 with using leverage. So that's how that wealth transfer is happening. All right. I know there's many more questions coming in. So what is the biggest takeaway that you want listeners to take away from this episode?
So here's what I would say, and I'll just come back to what our mission is at Cashflow Tactics. Our mission at Cashflow Tactics is to empower people. This goes back to raising your financial intelligence, but empower people with money. Guys, we are not taught about money. And I don't know if that's by design or by default. We are taught to be cogs in a machine. And if you're not careful, you will be a cog in a machine and be dependent on whatever that machine can produce for you for the rest of your life. So our objective, our mission is to empower people to achieve financial freedom in 10 years or less. I think that's a very, very powerful framework to say, look, there is a mission, there is an objective. Financial freedom isn't like retirement, right? Retirement is maybe one day, someday, hopefully I'll have enough money, but none of that is defined. Financial freedom is when your cash flow from your assets exceeds your expenses. You, my friends, are free. So it's financial freedom in 10 years or less. So look into your world, look into your life, and I'm going to invite you to ask yourself 3 questions. These are the 3 questions that will drive you and help you cross a bridge to go from I'm going to hope that everything works out to I'm going to make everything work out. And these are the 3 questions. And for me, Whitney, you know my story. I hit rock bottom in my life after 2008. I lost a bunch of money, and I'll be honest, that hurt. But after that, over the last 5 years in my career, as I was climbing the corporate ladder, I was making all these trade-offs. And I didn't understand it at the time, but looking back, I understand it fully now. But the trade-offs were, hey, I can make more money by taking a promotion. And so I took promotion after promotion after promotion. And the trade-off was I made a little bit more money, but I took on more responsibility. I took on more pressure. I took on bigger teams, bigger geography. And I found myself living in a different state than my family twice in my professional career. And I'll never forget the second time. This was about 3 months after I had lost all the money in 2008. I was living in Indianapolis, and my wife and my young son were living back in Texas. And my young son, he was born with a heart defect, and I knew about the heart defect, but I'm an optimist. And I thought, man, he's going to grow out of it. And I'll never forget, I got a call from my wife. And on the other end of that line, she told me that my oldest son was going to need an emergency open heart surgery. Now, in that moment, Whitney, I felt like a failure all across the board because I wasn't a present father. I didn't even live in the same state. And whenever I was home, I wasn't really home. I was physically there, but mentally I was checked out all the way. I wasn't a present father. I wasn't a good husband. I wasn't taking care of myself. I was working so hard for enough money and hopefully one day. And that one day would never come. That's chasing the horizon. When I got that call from my wife, I realized I might lose everything. I might lose everything that I really care about. And that opened me up to making some radically different decisions with my life, with my time, and ultimately with my money. I came back home. I spent the next 2 weeks in the hospital with my son, and he was given a second chance. And I remember in that hospital, I was really a spiritual moment for me. I was pushing him in a wheelchair, and he was just a little 4-year-old at the time. And I was pushing him in a wheelchair, and the hospital that we were in had 2 buildings, and it was connected by a sky walkway. And that walkway was up on the mountains, and you could kind of look out over the valley a little bit. And I remember pushed him to the middle of that walkway, and I was talking to him, but I was really talking to myself. And I said, Doug, what do you want to do with your life? Right. And he said something, I want to, build a Lego robot, because he loved Legos back in the day. And I said what I wanted to be. I want to be your father. And I knew I had to do something different. I had to find a way to own and control my time, and money had to be the tool to do it, because like it or not, money's part of our life. And in that moment, I made a commitment. I felt like I'd been given a second chance to be his father. I had to figure out a way to be present. And so this helped me open up that the only difference between what I wanted and where I was I had to become someone different. So my friends, these are the 3 questions I'd invite you to ask yourself. Number 1, what do you want? Get a clear mental picture. The crazy part is, Whitney, we do game plans in our world, and I've asked that question to so many people, and that seems so easy. What do you want? Do you know how many people can actually answer that question? Like none, very few. Man, almost everyone can tell me what they don't want, but very few people can actually tell me what they want. My friends, if you don't know what you want, then it doesn't matter what you do with money. It just doesn't. So get clear on what you want, number 1. And then number 2, take it out of your head and put it in your heart. Why does it matter to you? What do you want, and why does it matter? And then the 3rd question, this is the most powerful one, the most exciting one. And this is where our mantra actually comes from. When we talk to people, yes, financial freedom in 10 years or less, that's the banner that we stand for. But really the mantra behind that is rise up. Rise up, live free. And the 3rd question is, who must you become? Because the only difference between you being financially free and you today is you're not capable of it yet. Now, that doesn't mean you can't become capable of it, but that person who's financially free does not yet exist. You have the sacred opportunity, and I would say obligation, my friends, to become that person. So that's what I'd leave the community with today.
Oh my gosh, pure gold, Ryan. I love it. Tell people how they can reach out to you. Where can they find you?
Yeah, Whitney, you're so rad. We run a company called Cashflow Tactics, and I think the fastest way is just go there. Go to cashflowtactics.com. There's a big green button on the top of that website. And it says something interesting. I can't remember what it says, but I think it says start here or free training or whatever. Watch the free training. You'll see exactly what we do, exactly how we do it. And I will promise you right now, most of what we do is not for you. So we tell people, look, we only serve the 3%, the people who are willing to rise up. I bet that's most of your community, Whitney, but some people look at our message and like, these guys are crazy. I mean, they're crazy. And I'll be honest with you, we are. But so go to that webinar. And if you like that webinar, then you'll see exactly what our strategy is. We have a thing that we use called the Financial Freedom Formula. It really lines everything up, and it shows you how to use money as a tool to become financially free in 10 years or less.
Awesome. I love it. I love it. And thank you to all the listeners for joining us today. For those of you who are here live, don't go anywhere. Our after party is about to start. But if you're joining us online or on YouTube or on a podcast, make sure to go to passiveinvestingwithwhitney.com for future masterclass sessions and to check out our open deals. Brian, again, thank you so much.